This is ShadowQuant Forex Edition, brought to you by AriesLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Sunday, June 14, 2026, and this is the New York session. Now, let's get into it. The market is holding its breath this week. The FOMC decision looms, the US dollar is at a 3-week high, and the VIX is flirting with 18. But the real story is in the flows. Leveraged funds are piling into gold, and the yen is getting pummeled. What's the trade that's going to move the market this week? We're starting the week with the dollar at a 3-week high, with the US 10-year yield at 4.45% and the Fed funds rate at 3.62%. The VIX is at 17.68, still in the low end of the range, but the fear index is at 14, that's extreme fear. The dollar is strong, gold is up, and the US equity indices are mixed. The big question is, will the Fed hold or cut? And will the dollar keep its grip on the markets? The Fed is the main event this week. The FOMC meeting on Wednesday is the biggest catalyst, and the market is pricing in a 70% chance of a hold. But the key is the forward guidance. Will the Fed signal a rate cut in Q4? If they do, that could send the dollar lower and the risk assets higher. But if they stay hawkish, the dollar could strengthen further. We also have the GDP now estimate on Tuesday and the industrial production number on Monday. The economy is still growing, but at a slower pace. The 10-year yield is at 4.45%, and the curve is flattening. That's a sign of caution. We have to watch the inflation data. If CPI comes in higher than expected, the Fed might stay hawkish.
Looking at the technicals, the euro-dollar is stuck in a range between 1.1503 and 1.1589. That's the 5-day high and low. The cable is also in a tight range, between 1.3325 and 1.3433. The dollar-yen is holding at 160.22, which is the 5-day high. The key levels to watch are 1.1503 for euro-dollar, 1.3325 for cable, and 160.22 for dollar-yen. If the dollar breaks above those levels, we could see a stronger move. If not, the range might continue.
The COT report shows that leveraged funds are heavily long in gold, with a net long of plus 112 contracts. That's a strong signal. The yen is also being shorted by leveraged funds, with a net long of plus 112 contracts. The RC is long at plus 42,292, and the Canadian dollar is short at 58,623. The DXY is at a 3-week high, and the flow data shows that the dollar is being bought by institutional investors. That's a key factor to watch. If the flows continue, the dollar will hold its position.
The real risk this week is the FOMC decision. The market is expecting a hold, but the Fed could surprise us with a dovish shift. If they signal a rate cut, the dollar will drop. But if they stay hawkish, the dollar will rally. Another risk is the geopolitical situation. The US-Iran deal could have a big impact on oil and the dollar. If the deal holds, the dollar could weaken. But if there's a reversal, the dollar could strengthen. Also, the VIX is at 17.68, which is low. But if the market starts to panic, the VIX could spike. That's the risk we need to watch.
The big picture is that the market is waiting for the Fed to decide its rate path. The dollar is strong, but the risk assets are mixed. The key is the FOMC decision. If the Fed stays hawkish, the dollar will hold. If they signal a cut, the dollar could fall. The flows are also important. The leveraged funds are long in gold and the yen is being shorted. That's a sign of confidence in the dollar. But the real question is, will the Fed cut or hold? That's the story this week.
The Fed is the main event this week. I'm watching the FOMC meeting closely. If the Fed signals a rate cut, that could send the dollar lower and the risk assets higher. My call, dollar-yen bearish, target 159.5 by Friday.
The technicals show that the dollar-yen is holding at 160.22, which is the 5-day high. I expect the dollar to hold its position, but if there's a Fed dovish surprise, the dollar could drop. My call, dollar-yen bearish, target 159.5 by Friday.
The COT report shows that leveraged funds are long in the dollar and short in the yen. That's a strong signal. If the Fed stays hawkish, the dollar will hold. My call, dollar-yen bearish, target 159.5 by Friday.
The Fed is the main risk. If they stay hawkish, the dollar will hold. If they signal a cut, the dollar could drop. My call, dollar-yen bearish, target 159.5 by Friday.
The EFF-OMC is the key. If they stay hawkish, the dollar will hold. If they cut, the dollar will fall. My call, dollar-yen bearish, target 159.5 by Friday.
If you're finding value in this analysis, support the project at Patreon. com//ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. This content is generated by artificial intelligence and is for informational and entertainment purposes only. It does not constitute financial advice. Forex trading carries significant risk of loss. Always do your own research before making any trading decisions. That wraps up this edition of ShadowQuant Forex Edition. Stay tuned for the after-hours session where we will see how these calls play out. Until then, trade safe.